The results did not come as a surprise to the market after a warning by the retailer in a sales forecast earlier this month. CEO Sean Summers said as the business returned to profitability under his strategic plan, the group's financials would be bad before they got better. Among the interventions considered is the closure or conversion of over 100 loss-making supermarkets to PnP franchises or Boxer stores. He says his strategic plan is underpinned by renewed customer focus, re-energized employees and improved execution.
The reality for the company is that for a very protracted period of time, PnP has been in a decline, and there are many, many reasons for that. And I suppose at the crux was the fact that the company, to a degree, lost its focus on its basic operation as a retailer. Our stores were not adequately invested in, and in terms of the leadership in the organization, their focus was perhaps more on the P&L and the bottom line than it was on really building a sustainable business for the future. Our main goal and mission since I have been back was in the first instance to assess where PnP found itself, and then to assure that we reasonably set about a recovery plan for the organization that entailed really getting to grips with some of the fundamentals that had been lost in the organization.
Founding family, the Ackermans, have announced that they will give up their majority voting control, bringing it to under 50% after the planned rights offer. The family will also give up the right to nominate the chairman, the CEO and the chief financial officer immediately. Despite the tumble in profit, the market has reacted positively.
We're getting decisions from PnP that the market has been looking for a long time, and that's a real shake-up, a real change at PnP, because for years we've been promised that the turnaround is around the corner, but it never quite happens. So obviously, with the Ackerman family taking a more of a back seat, they're dropping board seats. They will still be following their rights, the rights offer. PnP obviously raising 4 billion, recapitalizing, and really trying to get its strategy back on track. I think very optimistic. And you can understand why the stock is up, 6.25% at the moment. So the market definitely liking what they're seeing, even though we did see, a decline of 87% in full year trading profit. Now, we did know a lot of what was going to come out because there was a sales update on the 22nd of May. But obviously, the market looking forward, looking through this and saying, is this the time that PnP really manages to turn around? Other parts of the strategy that were announced today, the QualiSave brand that was only recently launched will be moving back to the PnP brand, for example. Yes, they're going to shut a lot of those stores, but and they've announced that they expect volume decline. But this level of I suppose change at the company is definitely needed.
On a positive note, the grocery retailer did see its Boxer, PnP clothing and online businesses continue to deliver strong results. Online sales at PnP grew by nearly 75% in the past year, while sales at Boxer grew 17.3% with 50 new stores opened.
Boxer is a beautiful business, continues to grow fantastically for us as a company, and we have big plans for Boxer post the IPO in November. And the issue with the IPO Boxer is that PnP will realize a bit of its investment to help sort out its balance sheet. So along with the rights offer that will be going out in June, we hope that by the end of the year that our balance sheet will once again be restored.
SABC News, Johannesburg.